All right, good morning, everybody. Happy Monday. Welcome back to Daily Profit Plan. Let's get started. Let me get the screen share up and running for Zoom. We are streaming on YouTube and LinkedIn, Facebook, Twitter, X, all the above. Let's get the screen share up and running here. All right, well, as always, never a dull moment in the markets. And we had a little 7 a.m. surge with some Trump talk saying that we're going to have a 5-day basically ceasefire. Um, Iran claps right back and says there were no talks. There are no talks. So looks like some market noise this morning. I've got plus minus around 85 points today, 84.31 pre-market on SPX. We'll get that thrown into the expected box, get the chat up and running, and ready to tackle another day. We do have some expirations for engineered options. So we'll see what that looks like for our levels. Markets are up a decent amount pre-market. I've got a gap up. I mean, this is futures, so that 7 a.m. surge pushed this market up about 2%. So we opened lower, hanging out around 2.6%, up as much as 3.6% on the news. Looking at the CFD, same thing. Markets down as we started, big surge all in one candle. This to me looks like a lot like a news candle. So let me just drag a fib from low to high. If there's any follow through on this today, so we have a low, high, we pull back to that 38 to 50% zone. I would think that the markets would be trying to test the highs today, if not going a little bit higher into like the 67.50 zone. So, this is where we'd be opening, get your plus minus on the day, and see if things stay relatively efficient. We had an inefficient day on Friday with a pretty ugly close. I mean, we ended up still grabbing some dollars on Friday, but it was certainly not a fun way to close out the day when I watched, like a 5 delta become threatened. Anyway, it was fine. We made money on Friday, so not complaining. Just was an interesting session. So here's some of the gamma levels this morning. I mean, again, it's kind of a tough one to read, right? All looks like it's lingering to the downside. I'll go real-time gamma with dynamic trend. And let's get our expected move box here. Had a chart alarm going off on oil. I think it's below 90. I need the volatility here. So big smash in volatility from around 31, which was overnight, all the way down to 20, and now it's back to 24. So, sheesh, just some crazy stuff. Couple chart alarms to set. It's fine. So expected move box, I've got an 84.31 pre-market SPX. 84.31. I've got some TACE showing in there, 69, 69.49. Okay, good stuff. All right. Talks are indirect. U.S. and Iran exchanging information via Turkey, Pakistan. Yeah, that's fine. I mean, it's noise. The market clearly takes it in stride, kind of overreacts today. We'll see if the market's going to, calm things down / be an efficient day. That's honestly all that matters. Whether we have talks, we don't have talks, whether we, carpet bomb or we don't, is if the market stays efficient, there's a chance to win. If it doesn't, that's why we play defense. All right. So what's think or swim? I'm seeing 69. I'm seeing 72. TACE, I'm staring at 84.31. I'm still going to take the higher of the two. Okay, so that's where we closed last week at 65.06. We're going to be looking at a big gap to the upside this morning. Some levels on SPX and XSP were filled. I mean, if we're looking at like a 1.5 to almost 2% rally to the upside, We're getting back above the 6600s again, with some major expirations coming this morning on engineered options. So we should have our XSP trades looking decent. April 24th, that was an Iron Condor. The weekly trades, this one for defense at 52. This one for defense at 59. I mean, it looks like today we're going to be opening up around like 665, 666. If it stays there, we've got 2 defense trades, a loss on participation, loss on break even. We're still making a decent chunk this week from last week's trades, and we'll kind of look at the same situation. I mean, it's just a bit of a topsy-turvy market, but we're still making money. That's the name of the game. On some of the monthly trades that are out, what are the 331 expirations? Out 8 days right now. We've got monthly spreads. I've also got the monthly butterflies. So we've got the monthly bull put spread, and then I also have some EGO monthlies here. That was a 65, 85 by 75. These are all broken wing butterflies filled at $2.50. So broken wing for $1,000 profit trap, 1 for 1. Okay, same thing. I mean, we got a fighting chance to see if engineered options can pull in some cash today for winners from last week's trades, and by the end of the month, if the market's going to fight back. If we're trying to salvage something for the month of March, I mean, it was down almost 5% for the month so far. So if we try to fight back and leave a long wick to the south, here is the monthly candle. By the way, did anybody see overnight that the spot price of gold hit the 200-day moving average? I was literally staring at it last night trying to put on some futures trades, and couldn't quite get the setup that I wanted. I was looking for. I mean, I guess I could have. I just could put a smaller debit spread in or smaller credit spread in. Debit spread probably best. I mean, there's rarely assignments on futures, but just in case. But I was expecting a decent bounce. Depending on where we open this morning for GLD, I might start throwing in another bull call spread out, 6, 12 months, just get some positioning in. This is the monthly candle. So this is SPX monthly, was down about 6%. Yikes. And the 6% is fighting back a little bit. So let's see if the wick to the south is going to get longer, which means if the wick to the south gets longer, the body of the candle gets smaller, and this market might just fight back and leave us with 1, 2, 3, 4, 5 nasty months of volatility, hanging to the highs, not quite getting there, pressing the lows, not quite damaging them as this rotation continues, and pretty wild and crazy fashion. So the month is not done. This bottom is not in. I'd be pretty reluctant to say like this is the bottom. I think you could have some short-term levels for sure, but to say this is the bottom is going to be tough. I think this rotation continues. So we are hanging out, daily time frame wise, right around the 200-day moving average. Back to SPX here. Once we open this morning, we're looking at a pretty big gap. So most likely finishing, if we open the day way up here, that's a massive gap. Now, that could still get filled to the downside, but opening up here in green and back above the 200-day moving average, I mean, technically that's a good sign, right? We had this unraveling, opening back above with a decent push above the 200-day moving average. I think the market could certainly get back into like the 6750 to 6800 zone, and then we'll see if that's kind of the next point of resistance. I mean, near term, this was support. That support broke. If this becomes resistance, market rolls over there. If we reclaim 6,800, reclaim 6,850, then this market might have a retest of the highs. And we're just looking at a bigger range with major resistance. I'm not getting excited about these highs, but I would certainly enjoy watching the markets rip, 400 points off the lows as well, right? And if anything for me, it is a deleveraging, okay? Meaning I personally want to start reducing some of the exposure that I have, some of the ratio spreads I've put in, some of the naked puts that I have. So Project Options Edge will probably have to have a video update on this, or we'll have a live session on this. But if this is offering up even, small profits on some of the longer duration trades that I have, I do want to take those profits, get that buying power back, and just sit tight. I say all that because this is one thing I looked at this morning. This is genuinely concerning. This is a model portfolio that essentially uses like 80 different metrics for risk management. This in the last 2 weeks was using. This is typically, by the way, this is typically a 60 30 10 portfolio. This is usually pie wise, it's usually 60% equities. I'll just type this out versus trying to freehand it. So this is usually 60% equities and 30% gold and 10% Bitcoin. Okay. That's usually what this is. In the last 2 weeks, this thing has been trimmed to 92.5% cash and 7.5% gold. Major difference. Right. So, again, this is not the type of portfolio that outperforms necessarily, right? It's not the type of portfolio that outperforms, but it's the type of portfolio that avoids a lot of volatility drag. So when the market's going to be down or churning, drawdowns of 5, 10, 15, 20%, this does a pretty good job of avoiding most of it. Not all of it, but most of it. Right. And then when the coast is clear and the market can give let's say the market's going to be up 15 to 20%, this thing could probably capture 15 of the 20 or, 10 to 12 of the 15. So it does a pretty good job of participating on the upside without taking in, all of the downside risk. And this is why, because the exposures, maybe a dozen times a year will change. But I just thought, man, in the last 2 weeks, this is a major difference. 60, 30, 10 is now literally zero exposure in equities. Zero exposure in equities. Okay. I'm not saying that to scare anybody. I'm saying that this is a way to avoid volatility, right? I know that all of my levels, I mean, right now, the most exposure I have, and I see that comment there, David. The most exposure that I have, and again, it's all defined risk. Like I'm not really super concerned about the defined risk trades. Like waterfall income is sitting down here between 6,200 and 6,000, right? We do have some stack trades in there. Okay. Um, but it's to me, it's not huge trade sizes. I'm risking 450 to make 50 with a profit trap. I'm risking 4 to make 1 with a profit trap. My naked exposure, my naked puts, all that stuff is typically way down here below April lows, way down here. So even with the model portfolio that I kind of track and watch and seeing this massive change, this isn't necessarily calling for a 30, 40, 50% correction in the markets. It's not. This is just saying with this current environment, oil spike, higher inflation, yield pressure, all these things just putting pressure on growth, right? It's potentially forcing earnings compression or at least reassessments of earnings valuations in the near future. And if the market's not going to take it well, then we're going to see a pretty big unwinding. And whether it's all in a straight line, it won't be. It'll move in waves. But I mean, technically, we are doing some testing, if not some damaging, to these key levels. Testing the 200-day moving average. It's important that we see prices react to it. If it doesn't react, I guess with a sustained move, if we react short term with a green move here, only to see that head back up to a lower high and roll back over, that is the not fun correction, right? When it takes all this time to kind of roll over and top out, and we go high to low, lower high to lower low. That's if that plays out. If that plays out, this is going to be the least enjoyable because from there, then we start looking at more downside pressure. Okay. And that's a big if. Like, I don't know if that's going to happen, but I wouldn't put it past the market this year to continue to deleverage. Smart money, probably deleveraging. The retail crowd's been benefiting from buying the dip. Um, to me, if you're asking me where the dip is at, it's going to be down here around 6150, or it's going to be down here around 5600. That to me is where I'm saying, okay, I'd allocate some capital there. I would sell some puts. But to me, the safest place is where I've been trading all year, which is down below the April lows. and that's on individual stocks. That is on the indexes. So that's where a lot of my big exposure is, and that's a long ways away to go down and take out this level by September. I mean, obviously anything can happen, but should not be. I don't unless unless the Trump administration wants to go down as one of the biggest failures in history for the second term. I think they will do everything just like they did this weekend: jawbone, 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 jawbone. Right. So, is this a short term blip in the market? I mean, we're looking at futures again up 1.75%, but I just don't think this administration vocally is going down without a fight. I don't think that the economy is necessarily going to roll over. Um, just a lot of stuff to navigate. That's all. Okay. All right. So for today, daily profit play, we have a decent plus minus to work with today. Waterfall income. Um, we'll continue to look at our trades. I still like strategy two. We're down from last week, so we might be able to position ourselves for a even more forgiving. If we use that 10% buffer, let's see if we can get our similar trade. I still like strategy two a lot. Volatility is still high. We're at 24, right? So VIX is still high and remains elevated. Um, let's see here. Newsbreakers. We had a winner last week on Micron. Double up. We had a fantastic winner last week. We closed out at that. The pin price was 65.75. Ended up giving us about a 515% winner. I was looking for Jason over the weekend, or I'm not sure if he was with me end of day Friday, but that same trade we were talking about, we had a member that was talking about a 6,500 pin price with a 50 wide butterfly. We closed last week at 65.06. Now he did take 1,200% profit, which is a fantastic trade. Like $100 risk turned into like $1,200 profit. That's amazing. Um, the crazy part is that turned into like a $4,800 winner. Actually, I guess no, I take that back. About a $4,200 winner, because it was like six to $7 off of the exact pin price, but still, heck of a trade. So double ups is good last week. Pinch point had some winners. We took a couple small losses, like HBQ was a loser last week. There was one other one I believe that expired. Just didn't get the movement, but we had like three. I think we had three winners last week on pinch point. We're still averaging almost 85% winners on that. Engineered options. This is why we do the 7-day expiration, because today with the fight back on Monday, guess what? We're likely looking at if the market has this defense, right? And it pops up today and stays up today. We have two defense winners at the 50, 100% ATRs. That could be fantastic for us as a net profit. And on top of that, the way that I scale the trades, one contract, two contracts, 4 and 4. If I lose, and win, I'm still up a decent amount. Okay. That'd be $400 minus 100 minus 50. So I'm still making what? So it'd be losing 100, so 250. Still making $250 for the week if they hold above our defense levels, which right now I think has to be above 660. So if XSP is greater than 659 today, we should have winner on those defense trades. And I don't have to hold it all day either. I mean, if you're looking at this as like, okay, the market just gave us a gift, we've got some net profits, then let's take it. Let's manage it, right? So, knowing that my max profit at the end of the day would be $250, if I'm showing $150, $175, $200, I can close that at any point and just take the net profit. Okay, so we'll see what that looks like this morning. Let's see here. Would you close? Yeah, that's what I'm talking about. I'll watch it. I'll see it. I'm not looking to close it right away. I want to see what this market does. We should be opening high enough to get above those defense levels today. All right. What else? Somebody's asking about gold. Yep, 200-day moving average, further downside. I don't know. I think gold, I think you're going to see some bid on it. To me, it's just an opportunity to be in it. If we come back and retest the low, that's fine. I just think like this is what the market needed, at least from a technical side. Um, I mean, it, if you think about what gold has represented and stood for the last 12 months, is that narrative changing? I think the only reason that this is falling is because so much profit was made on gold that people are selling gold. But I don't think smart money and big investment banks and countries are selling gold. I think they're using this as an opportunity to load back up. And if I look out 12 to 24 months, 5 years, 10 years, I would like to think that gold is going to be higher. And I could be wrong, but I think after a 25 to 30% correction, I think is a good opportunity just to take a chance at gold long again. There's a 27% correction. Okay. That feels a lot better than feeling like I got to chase this thing to all time highs, which I'm glad that I didn't. Okay. This also helps because of some patience getting some levels that I want. So, do I think we can come back and retest that level? Yeah, possibly. I mean, key supports, I would say, this is resistance becoming support all the way the heck down here. I just talked about this big equilibrium. If you go to the higher time frame, I mean, the wick low is still just below the 38%. I could still see this giant move settling between about 4,100, maybe 3,600. So I'm not saying the bottom is in. I just think that gold is still going to maintain some type of bid in the big picture. So I'm not trying to be super time sensitive in gold. I'm just trying to use this discount as a chance to get in at a fair price. If I can establish a line in the sand that is, let's say, 4,000 and prices above 4,000, that's a good trade. Especially if the all-time highs are at 5,500 or 5,600 and we go higher, right? Okay. So, um, markets up this morning, futures still up 1.6%. We'll be looking at a gap today. Expect to move. Let's make the adjustment. I'm seeing an 84.31. Again, going pre-market. And we talked about those support levels last week. They didn't hold. Markets were below the expected move last week. Fought back at the very end of the day. That was a low around 237 and then ripped up for the last like 90 minutes. Played it very close to that 6,500 handle. Could have been managed better. Certainly could have been a lot worse as far as the net result. I mean, my defense was in trouble. My break-even price was 64.75, and we had a low at 73. So, I mean, because of that rally that allowed me to take a little bit of defense plus have some extra run, I grabbed like $360 on Friday. But it was not looking. Literally, I was like, I'm going to be down like $2,000 today, but I wasn't. So I'll take the nice quick turnaround at the end, and then following through today looks like we're going to be opening up, like 1+% higher. So looking something around this, 1.5% gap higher puts us up to 6,600. If there's a gap up and a hold, let's say we gap up and we stay, we gap up and we push higher. I would think, and nobody freaking knows, right? But I'd think that if we have a 1.5 to 1.6% gap up, it would be difficult for the market to throw another 80 points on top of that. So just as a hypothetical, again, this could have the kind of crazy day like we saw last week, Liberation Day, when it was like, okay, here's the world tax. And then, April 9th was great time to buy. And we completely flipped the script and said, no, this is trade more, not trade war, blah, blah, blah. And the market was up like 9% in a day, right? So is it going to be one of those wild and crazy days where nothing is safe? I don't know. I'm just going to trade, define risk, let the markets be efficient. We had an inefficient day on Friday. I would think that they, can't really afford to keep rolling this risk day after day. Okay. All right. Gold is falling because yields are rising. Yeah, but that's short term. Again, I mean, I get it. Like, look, there's no guarantees. There's no free lunch in trading. Gold is falling; it could fall further. Oil's up; it could rally more. It's like anything can happen. It's just a trade. So it's hard for me to prescribe to like one narrative. Like this is what I'm going to do with my entire portfolio because I'm not. I'm taking a bunch of base hits. That's what I'm doing. But do I like gold? Yeah, I do like gold. I want to have in the portfolio. How? Risk defined trades. Okay. All right. So 84.31. Let's adjust this. I'm just going to keep box 2 visible, 84.31. And then once we have the open here in a couple minutes, we'll have the gap up. It'll be gap adjusted. So this is roughly where we're going to open. Take our 84 points higher. That'd put us right around like 6,700 as a potential spot today for gamma, or I should say, as a maybe an expected move to the upside. Could it go higher? Sure, maybe. This does seem like the kind of day where if we have a huge gap up, either price is going to have more pump to recover and do it faster with just like zero DT flows all day, or this is gap higher and start to fade it because it's just uncertainty, or it's gap up and do nothing. And the market sits here and says it's a green day, hooray! But intraday price action wise is implied is greater than realized, expected is greater than actual. But if I'm selling premium, I'd like to sell above 6,700. Okay, I still want to play defense. I want to trade. I want to put my. I think today's a good daily profit play, simply because we had a Friday move as well that was inefficient. I'm looking to see if we'll kind of make up for that on Monday. All right. So we open up here in just a couple minutes. I'm going to get the broker platform at the ready. Why is that? Okay. That seems off to me. I was down like 76K this morning. Interesting. There we go. Jesus. I was like $300,000, now 45. Big effing difference. Talk about making me wonder what the heck's going on with implied volatility. All right, SPX trade. We're down to a 64 plus minus. I'm going to use the 84s. We should have a gap here in 1 minute on my expected move. So here is looking to see where price is at. So this is giving me a reading of 66.86 for my highs. Okay, and then gap adjusted, this is all the way down to 64.22. So it's a pretty big space. So the nice thing is my expected move box, there's my box right there with the 1 minute candle. 66.86 and lows around 64. I mean, I would think we can go a little bit higher on the lows. I mean, I would think that maybe this low is safe for the day. Let me get some real-time gamma here. I think I've got it hidden in the background. Okay, let's try that again. Okay, so here's what I'm seeing. Market opens. I've got a 65.74 open. We're already at the 100% ATR. Gamma levels real time kind of run out of steam around 66.40. Measure move to me with the gap adjusted is around 66.86. I'm going to see if I can get some premium for that. 66.86. It's actually a pretty high delta. That's a really high delta, in fact. Okay, well, that makes things interesting. Let's go a couple minutes in. All right, I'm going to try to get some sells here. So 66.86 gap adjusted. Let's see. 90. If I play some defense here, I want to see if I can get a bear call spread. So bear call spread, $1.40. I feel like these deltas have to adjust a little bit. Let me look at a 10 wide. Let's go 16 delta here. These deltas have to adjust. This expected move should not be eating into a 15 delta. The heck, man. That just seems a little off this morning. See what I'm saying? Like this expected move call side should be like a 20 delta, not a 40 delta. This expected move should be about a 20 delta, not a 16 delta. So just let me chill for a second here. All right. I'm going to try to stack up some bear call spreads. And, bull put spreads, I like it to be, I mean, we had lows last week around 64.70, 64.70. So 64.70 lows, 66.90 highs. Let's see if I can stack up a couple of bear call spread or daily profit plays and get that to pay. So 66.90. There we go. Now the deltas are adjusted. So 66, that's a 10 delta, 10 wide. 64.90. There we go. This is a little bit better now. 75. All right. I'm going to go 10 wide here for $1.35. This is 66.85 10 wide and 64.75 10 wide. Trying to get, I mean, it shows about $1.35 right now. I'll try to get $1.35 and get it filled. $1.40 is great. $1.35 is not filling. $1.30. All right, in for $1.30. I'll put this in daily profit play telegram. 66.85 is my sell strike call. 64.75 is my sell side put. Okay, 10 wide. I'm going to layer in a little bit more here. 90, 67, and I'll go 80, 70. Similar trades. This one's $1. See if I get $1.35. Another one. $1.25. Come on. All right, filled for $1.20. All right, coming in hot. New trades. I'm doing 2 DPPs, 10 wide, 323 expiration. That was filled for $1.30 credit. $1.20 credit. Okay. So in for $1.30, in for $1.20. Good fill there, Keith. 135, very nice. Okay. So that is around 80 to 90 points higher with an expected move that's now showing 53 points when we looked at the pre-market at 84. So hopefully staying out of the way there. And then 66, my put side is over 120 points away from current price. I mean, again, mechanically speaking, should be plenty safe for us to get some profits today. So if I'm pulling in, so I'm working around with about 250 of credit. I do want to have some defense ready to go. If I go 75 by 90, that gives me a 15 wide. Then I can go 20 wide up here. See if I get a pretty low debit on this trade. I feel like the put side defense I don't necessarily need, at least for right now. That's my initial instinct is I'm not going to need put side because I feel like this market's going to thrust off this news, at least for today. So let's see. That gives me, let me try to build like a 20 wide trap up here. 20 by 30 for 70 cents takes me down to $1.80 on the day. 15 wide. This one's not too bad. I mean, get defense at 20 cents. It's not bad. All right, let me see if I get this thing for like 5 cents debit for defense. I don't mind sacrificing 5 or 10 cents for a $1,500 defense trade. Let's hold off on that for right now. Okay. Yep. Engineered options looking good, right? Yeah, those defense trades. I mean, we got filled at the 50 and the 100% ATRs last week. So, yeah, looking a lot better today. Could I get some cheaper defense here? Maybe a 40 wide. Nope. Maybe a 30 wide. It's better. That one's not too bad. Well, no. Oh, let me. This is fudge. I'm hoping for like 20 to 50 cents defense. If I'm going to pay for it, I want to pay less than like 50 cents. The put fly is going to be a little pricier. 75.90. Okay. So what's our if we hit let's say if we hit 6,700 today, that's about so that's right around 100. I mean, that's a 200% ATR. I'm not saying we can't hit it, but that's going to be a tall order to hit today. So I'm going to see if I can put a defense trade in here for like maybe 15 to 20 cents. I'll try see if we can get a tiny credit on this first. 5 cents credit. Not filling. Try 5-cent debit. All right. So I've got defense in for 5 cents. It's a 75 by 90, so it's a 15 wide. That puts my break even at 67.05 for up to, a $1,500 profit trap. So if you want the defense, I'm putting in a top defense trade. There's risk on that thing, but again, we'd have to have a 200% ATR on the day if that's going to be the case. So top defense, SPX, 323 expiration. $5 debit for $15 profit trap. Break even price is 67.05 or lower. So no risk below 67.05. Helps defend call spreads. Okay. Sarah says, new here, never placed an option trade before. How can I get started? I'm so glad you asked. AB says, new member. Looks like I'm late on the trade. Can't seem to find the actual income machine format for trades. AP, Michael, income machine is not me. I don't know if you're looking for Graham's program or Nate's program, but income machine is not me. I'm looking at daily profit play. This is me. Daily profit play. Sarah, good place to get started. We got you. Anybody looking to get started, we got you. All right, so I'm at what's my top strike? Did I do a 90? So I sold the 85. All right, so I'm right at that top box. Expect to move right there. So I'm at 85. And hopefully some defense. Break even would be 67.05. So as long as price doesn't get below, you get above 67.05, that'd be good for the day. So 6705. Okay, on the put side, I am at like 64.90. 64.80, yeah. So we're way down there for the puts. 64.80. So as long as price stays below, above, then we're going to have a pretty good day. Okay. For anybody that is brand new to options, brand new to my sessions, brand new to live trading with me, I've got some free education for you. Here is a little one trade mastery. It's a 70-minute session. Just get your feet wet, get your beak wet, trading some options. You could buy the stock. You could buy a call. You could do a debit spread or credit spread, all expressing the same thing. I want to be bullish on a stock. I want to be bearish on a stock or an index or an ETF. Okay. If you can get your your head around this, as far as like option trading is just a calculated bet. You're betting on price, time, and direction, right? Price, time, direction. Price, time. I should say price, time, volatility. Direction is a strategy. If you want to trade direction, you can. If you want to trade no direction, you can. You want to trade both directions, you can. But anyway, check this out. So I'll post this in Zoom. So free session for here. This is the One Trade Mastery. It's a direct play link. One Trade Mastery. So that link in Zoom, you can just save that in a browser. That'll be a 70-minute video. It's really good. So I did it initially as like a front end thing, like I was building an ebook and doing some content generation. So it was good. That risk could be $1,500 on the top. I'm risking 1,500. So my risk is 1,500 to make up to 1,500, but we'd have to have a 200% ATR for that to happen. Again, I'm willing to take the risk and say that that's improbable. So if we look at the deltas right now, going up to 67.05, that is a 7 delta. So that defense trade right now has about a 93% chance of not being at risk. And I'll take that. I'll take that if I need it, because I need to basically defend myself. If something comes up to 66.85 to 90, I need to have something that hopefully helps me provide some defense. Is there a preferred trade? I'm in both. I'm doing both. So I've got bull put spreads. I've got bear call spreads. I'm defending the top right now more so than the bottom, because I think based on what this initial surge is we have this huge gap up. If the market's going to just continue to pump a little bit hotter, then I'm not saying my puts are completely, risk free. But I would think that right now we're probably running the risk of having that upside risk be the wilder and crazier move of the day. It's just like zero DT flows are so popular to like drive this thing up. And you're like, holy crap, this market did X amount of percent. That 85% expected move was not enough. But I also go back to Friday, which Friday was an expected move, was breached to the downside. So I would think that you usually don't see this, especially in daily profit flow. We have logged hundreds and hundreds and hundreds of trades this way. I've been doing this stuff since 2022. I rarely see the market have 2 in a row inefficient days. Unless it's the holidays, like end of December, I rarely see the market have inefficient days, let alone back to back. Okay. So part of me wonders if, today's price action is the market is excited in the morning and it just kind of hangs out for the morning and not much happens really at all, other than just it hangs out with a, hey, we're positive today. And it just kind of instills some relief in the market, right? If there's more pushing, this is probably something that either end of the day or by tomorrow, I would say maybe has a chance to fade a little bit. But we're trying to stay, below 6,700, which right now it's not even on the radar. 6,700, there's no gamma pressure up here at 6,700. So that should also be encouraging. There's no gamma pressure at 66.85. That should be encouraging. Now, this can change. If price is going higher, this can change. But I will hang out. Why? Because 50%, 100%, 150, 200%, our ATRs would have to be way up here. Even during Jackson Hole of last year, we went to like 176% ATR. We still didn't hit 200%. So it's just a tall reach for the day. We're already at 24, 25 VIX. Like hitting a 200% ATR on top of that with an upside move. Not saying it can't happen, but man, it's got to be tough. Okay. All right. David says daily profit is filled at $1.30, $1.20. How much debit are you looking for? I will assess. I mean, if here's what I'd like to see. If prices are open and hanging out and our $1.30 is showing, let's say, I mean, collectively, if I'm in for a max profit of $2.50 today, okay. If I can close this down for let's say $1.25 or less, I'll take the profit. So if I'm up on the day like $125 to $150, I'll just take the profit, most likely. That way the market can do whatever it wants to do, and I'm not worried about it. So I'm going to try to go after at least like 125, 150 bucks on the day per contract. Okay. All right. So we'll keep an eye on that for the morning. Let's take a look at engineered options for a moment because we should be seeing some profits rolling in. So we're up to 661 right now. This weekly is looking fantastic. Max profit here would be 200 bucks. It's up 164. This one, the 59 by 58 max profit is 200 bucks. It's up 100. So, I mean, right now, if I wanted to take profit, I'm up 272 with a risk on the other weeklies. This one is around break even. And what I wouldn't mind doing, let me see if I can get a break even or better on this one. This is going to be close. We're trading just under the 50-cent mark right now. But one thing that I might do is limit the exposure where if I can take this one as a winner, let this one go. I mean, what's nuts is this one might still be profitable. So if I go break even or better on this is the break even trade, by the way. So if I go break even or better, I'll give up the loss on the participation trade. I'll go break even or better on the break even trade. And obviously, the way I'm talking right now is if everyone's in my engineered options, you know exactly what I mean. These are levels that we trade. I call them participation levels, break even levels, and then our defense levels. So if we can get the participation trade, like that's probably going to be a loss. We'd have to have a big, big move up. And I'm not saying it can't happen, but we'd have to basically hit 6,700 on SPX, and then this one also wins, right? But if we can get the break even trade to be a break even result or better and have defense trades give us two winners, there's $400 of winners, there's a break even here, and there's a loss of 50 bucks. So if I can walk away with $350 from last week's trades, that's a pretty good win. Right? So I don't think that's a bad tactic. And so what I'm going to do here, because we have 50 cents on the break even trade, I'm going to go ahead and set this in right now. And these are ridiculous, by the way. This is a dollar spread. There's no way this thing's going to trade for $1 and change. So it's like I'm going to put in 50 cents debit. Actually, no, it'd be 50 cents debit and try to get a break even or better on this trade. So if price keeps going higher, that's a good sign. But I'm going to try to get a break even or better on the trade. Okay. So if I can get 50 cents debit, I close it out for a wash, and then I have two defense trades that would be sitting 659 and 652. And if price goes up, this expected move is going to shift higher, and this is going to become more of an out of the money trade. Actually, because we're in the put side, it's an in the money trade. My fault. So it's going to be further and deeper in the money. So the deeper it becomes in the money, the higher our probability of profit is. Okay. So I think break even or better would be fine. Part of me wonders if we're going to try to reach, maybe to 665. I think we can have this one maybe even offer some profit, but I'm not going to try to babysit this one. So I'm going to go break even or better. I'll put this in engineered options. Okay, well, I just got filled for 46 cents. Well, that was easy. So I just took a break even result here. All right, fine. So let me just get this updated. Engineered options, trade management. 7 DTE isn't an accident. So the 323 expiration XSP trades, we have participation level, we have the break even level, we have the 50% ATR level. All right. So this is the 667. XSP needs to be 667 or higher. XSP needs to be 663 or higher. XSP needs to be 659. XSP needs to be 653, 652, even better, or higher. Here's how I'm managing. I closed the break-even level for a 46 cents debit. So a winner. Looking for both defense trades to offer profit, near or at end of day for full winners. If participation trade offers break even or better, I'll close for break even or better. Setting a 50-cent debit to close. So currently expecting the following. So just type up a little summary and I'll get our new trades out as well. So participation trade, likely small loss. Break even trade, small win, closed for 46 cents debit. And then the 50% ATR level. Full win for a 0 debit by end of day. Full win, 0 debit by end of day. This morning's gap higher is another 7 DTE gift. So the smart thing for us to do is to manage net profit. Don't let a profitable net result slip through your fingers. Okay. So I wouldn't chase it there, Johnny. I wouldn't chase it. I mean, that trade, I was surprised it actually took. The bid ask seems a little bit wide. I'm surprised it took at 46 cents. I mean, price is a little bit higher. If you can get 50 cents debit or better, that's literally break even, minus fees. Yeah, you're giving the market $2 or something like that. But if my defense trade here and my defense trade here are going to show, $200 profit later today, then that's $400 for winners. Okay. And then I don't have to worry about the potential. I mean, because right now, if we hang out we're at 662 right now. So if price moves another dollar higher, that's fine. We can turn this into a winning trade. But my goal is if I eliminate the risk on it. So just the way you see my trades, it's like I have 1 contract, 2 contracts, 4 and 4. So if I eliminate this trade, I can't lose $100. In fact, I just keep. I have what? I have $8. So I just made $8 here. Cool, whatever. This is going to be a loss of 50, but this is going to be plus 200 and plus 200. Okay. So rather than hanging out to see, well, can I get that full winner? Because if I do, great, right? This is another $100 and plus 200 and plus 200, and that's great. But the market can't come down at all. If the market goes sideways or down, we still have risk on this trade because price has to stay above the 663 handle. It's a little bit easier for price to stay above 659 and 652, obviously, because we're way above that right now. So what I'm trying to do is eliminate this risk so it can't cost me anything. If I lose the $50, fine. If we get really lucky today, This market pumps all the way up to like 668, right? If SPX is pushing towards 6,700, guess what that means? We might have this participation trade turn into a freaking winner or break even or better. So if I don't lose anything here and I have a small win and a break even or better here, then I'm making, $4 and plus in the week from last week's trades. And that's how we manage it. Okay, good fill. 48 cents is fine. I mean, a small win is fine. Break even or better is fine. Okay, so on that note, I'm going to take the participation trade, which is still running. I'm going to put this one also at a 50-cent debit. Okay, close. It's trading for 85 cents right now. I'll put it at 50 cents. See if I can just take a break even. Okay, and if price keeps climbing higher, I mean, here's gamma around 665, right? So this is SPX, but you just do the math by 10, you're going to get like a 665 gamma on XSP. So XSP is right here. And did my screen just freeze? Yes, it did. Okay, 1 second. Let me close down my dynamic trend just froze on me. Hang on. Okay, we'll try that again. What's the most debit you would pay for the defense trade? Bill, what defense you talking about? Are you talking about the daily profit play defense today? I mean, if you pulled in like 250 credit with me, I would still pay up to like 25 to 50 cents for it. I mean, I think that's a good defense trade. You still have a chance to make $200 a contract. Yeah, I pay up to like 50 cents max for that broker wing structure. I mean, a lot of times we can get those broker wing structure. Ideally, I want to credit, but I get it. Like I might have to pay 10, 15 cents for it. Like this morning, I paid 5 cents. There's still risk on the trade, but I'd be willing to pay up to like 25 to 50 cents. That way, I can still have a $200 expected profit. I sacrifice a little bit on the defense, but it's there if I need it for potential protection of $1,500. All right. So let's try this again. We have gamma kind of running out of steam around like the 6650 zone. Here is, let me try to get an XSP feed here. There we go. So XSP, gamma is pretty sticky here around the 660 handle. So this is where we settle for the day. That's gonna be a loss on that break even trade. So we have again participation, break even, defense. If it keeps going all day, fine. So I'm going to make a quick update here as well. Likely small loss, but setting 50 cents debit for break even. So if you're in engineered options with me, I just did this. The break even trade, I just closed out for a small win. Okay. I'm putting the participation trade with a 50-cent debit to close out for break even or better. So if I can get a small win here, break even or better here, and we take the two winners on defense, we're up $400 from last week, even with two break even trades. If I lose on the participation trade, I'm still up $350 from last week. That's fine. Okay. Nice. Just closed out for 42 cents. Good. Small win. And it has to stay above. I mean, that strike is 662, right? That was a 663. So it has to stay above 663 for that one to be a full winner on the day, which it could happen, but I'd rather not take the chance. And part of the reason why is because that was a two contract trade. So this one is, max 50 bucks. So plus minus 50 bucks. This one is plus minus 100. If I take the $8 winner, I cannot lose $100. So I'm happy with that. The defense trades look better. They're getting deeper and deeper in the money. And so this is likely going to be $400 of winning. No loss here. So this is going to be plus another $8. And then if I lose on this one, it's minus 50. I'm still a happy trader. If somehow this one becomes break even or better, then I have 0 plus 8 plus 400. I'm very happy. Not bad from last week. Everyone's saying like, we're down, we're underwater. Now look at it. We've been doing this crap all year. Okay. I'm telling you, like this historical edge matters. The market finds ways to do stuff like this. I mean, like gold, it's Not a surprise that we, number one, flushed down to the 200 moving average because I talked about it for months. We finally had that crazy high bar count. This stuff happens, right? So anyway, it's just trading, folks. Like it happens. I've seen it a couple of times. So we're back above the 200-day moving average. Encouraging. Is it going to save the market? And this is the sign of the bottom? I don't think so. I think if this market gives us a chance to deleverage, I think we should. If we get up to this area, and when I say deleverage, I mean this. I think that these trades are still safe to ride out for like waterfall income. I'm still ride those trades out. But I'm saying the naked puts that I have, right? All of this, all my ratio spreads, all my naked puts, if those are looking even small profit, okay, I'm going to take them off the table because I am getting a little bit heavy on my beta weighted delta, which means my exposure on top of the S&P. I do have a long bias, but traders know this in my Project Options Edge. I mean, our trades are way out of the way. In fact, I will show you. This is kind of how I did this all over the weekend when I was just kind of reassessing. Do I need to limit some of my exposure? So I do have some hedges running. Okay, fine. I'm long Alcoa. I'm going to keep it. ABT. I've got some shares there. Fine. AFK. That's Africa. It's up. Let's see, that's today, so it's down about $150. No big deal. Okay, here's where we're getting into some of the Project Options Edge stuff. AMD, okay, is $206, and I've got a ratio spread down to $50. My probability of profit is 90%. It should be higher, but volatility is so freaking high that everything's like a wild card. So my point is, do I think the AMD in the next well, this is out to 2028, I guess. That's a little bit far. So I don't need to hold this trade and hold the exposure out that far. So it's up, $50. I can take the profit, get my money back, and okay, AMD is just not a trade for right now. I can trade it later. But it's this type of stuff. If I can close AMD for a small winner, I'll just take it, get the buy power back, and move on. So while I'm doing this, I'll just do this right here with you. AMD. And engineered options, I'll get some trades in for you. Don't worry. It's just like management from last week is kind of taking priority. And we've got management under control. I think the defense trades look good for winners. But AMD, I'm just going to note, like, I can take profit in this one and be fine. AMGN, this one is down about $250. I wouldn't take profit here, but we're trading at 350 and I've got a 240 strike. I'm not that worried about price falling another $100. Could it happen? Sure, but I'm not going to take a loss right now. So I'm not going to close it. Okay, Amazon. I've got some ratio spreads. It's at $211. My strikes are at 140 and 140 and 125. Do I have some profit on this? Right now, it shows them down about $120. So I'm not going to close it, but this is another one that if it offers up some profit here, I might just take it and limit some of the exposure. Okay, Broadcom, $322. I've got a strike at 130. It's up $60. I could take some profit there if I want to. Is the trade safe? Yeah, 95% chance of profit. But do I want to hold it for 270 days? Not necessarily. Do I want to take up the buying power for that? Not necessarily. So that's probably one that I'd let go and just grab $50 and move on. Okay, AXP, American Express. I just did this one. We're trading at 301. I've got a 150 strike. If it's showing profit, I might take, 30, 40, $50, make profit, take it for a small winner and move on. Get my buying power back. This is Bloom Energy. We're up $200 in this trade. It's up 81%. We probably actually this is out 32 days. I'm just gonna let this one kind of expire. I think it's looking good. That was looking good for a winner already. So we've got a max profit in this one around $200, and it's probably a wider bid mid ask. But I would think if I can get 175 to $200 on it right now, it'd be close. What's it doing, by the way? We have a profit trap in here for $15. I don't know. There might be a way we sneak in over $200 in that one. Anyway, it's profitable. That's not bad. This one, 85 by 80 for Baidu. This current trade, let me put a ratio spread in here. So current trade. Let's see. I need to. Somehow there it is. So I'm down $200. P&L open. So I'm down. I mean, I wouldn't close this one. Not yet. BITO, that's a terrible mistake. I just have long shares. This is so BITO initially was correlated with Bitcoin. Now it's not. So I'm just kind of sucking wind on this one. I might sell some calls, but I'm just going to hang on to it. My cost basis is not close. My cost basis is freaking 28.50. So I'm just going to hang on to that one a little bit longer. That's going to require some Bitcoin love. Cracker Barrel. I'm down $235. This one's out a little bit. 25 strike with a profit trap built in. I won't close this one. I'll let it ride a little bit. CEF is gold exposure and silver exposure. CEG is Constellation Energy. I'm up some profit. So this is another one I can close out, reduce some exposure. CEG. CMG, Chipotle. I just added some calls. This one's fine. I'm going to repair this one. Costco, ratio spread. So right now it's showing that I'm down about 30 to 40 bucks. Probability profits 97%. This one's out of ways. I don't know. There might be a split in between. If it shows profit, I'll take it, but it's down right now, and it's out long enough that I might sit on it longer. I won't write that one down. CVX, that's Chevron. I own some shares. I have a ratio spread. Ratio spread is break even. Now between this, it's like I like Chevron. I think it's a good dividend play. It's an energy play. It's been great this year, and I'm up 400 bucks. So could I take the profit, close it all down, get the buying power back? Sure, wouldn't kill me. DBC, that is wow, that's up. Not a bad run. That is an inflation play. I might hang on to that for that exact reason. But it's up $770. I might just take the profit. That was a pretty cheap trade to participate. This I traded that during COVID and through like 2021, 2022. That traded very well. It hasn't done squat for like 4 years, but now it's better. But I bought it again. So it's good timing. I bought it at 24, it's trading at 28. Pretty good. John Deere. This one's up a tiny bit. $570. My strike is 300. It's not even close to being at risk, but it's also an expensive stock that's tying up some buying power. So if I want to get rid of it, take the small win, get the buying power back. So maybe DE. The Dow, this one, I'll have to look and see what these are. These are ratio spreads. I'm pretty sure. Let's go out like 60 days here. So I have the September, January. Okay. I'm just going to get these categorized. So this is a 375, September 30th, 375 by 365 there. That's a ratio spread. 375 by 350. This is September 18th. So 375 is the buy, 350 is the put for selling. Another ratio spread. 370, 350. Buy the put and sell the 350 here. January 350 by 325, 350, 325. And this is also a ratio spread here. Okay, so right now, my Dow is showing that I'm down on the year, and I think a lot of this is just the volatility. So here's a May expiration. 455 by 440 Dow. This one is down about $67. I wouldn't mind taking this to repair it. Okay. This one's out to September. This is the volatility exposure that I have. Some of these are out longer durations, right? But the strikes are so low. Like this is a 91% chance of profit, 95% chance of profit, 96% chance of profit. But because of the volatility swell that we've seen and this consistent like 20 plus volatility, I'm taking on volatility risk. So if these are showing profit, like P&L open, I'm showing negative. So this one, this one looks great, but it's up to $800 of max profit. I'm up $200. Do I love this trade? I mean, it's only out to next January. Do I expect to make $8 on it? Yeah, I do actually. If I owned the Dow, I'd own the Dow at like 350, 340. So it'd be way lower than current prices. So anyway, I'll assess. I don't need to close out these for losses. DraftKings, this one might be assigned. I'll probably repair that one. DraftKings is going to get into the prediction market. By the way, everyone's saying like, "Oh, DraftKings is dead." I disagree. I think that this is going to be a prediction market in and of itself. It's going to join the poly markets, join the call sheets. It's going to be a feeder towards these these prediction markets. I think DraftKings will change its way and be more of like a data point. So I mean, they could botch it and mess it up, but I think if they're smart, they would try to join forces or kind of trade right alongside the prediction markets, trying to be its own standalone sports betting. Sports betting has become a wild and crazy thing. All right, EEM. Let's see, we're trading at 57. I've got a ratio spread naked put combo. This one, nope. So that's a ratio spread with a naked put. It's down $200. I'm not going to close it for a loss. Japan, still profitable. I'm going to hang on to that longer. Brazil, I'm going to hang on to that longer. This is that is Warren Pies 314. That's a little ETF they have. That's performed like crap. I like the guy, but that ETF has not done well. It's it's a tiny little chunk, but anyway. Freeport McMoran, naked puts. I'm up a decent amount of profit. Max profit $514. I'm up $400. Could I take it off the table in 87 days? I have a 97% chance profit on these trades. I can just let it ride. I don't think I'm going to take a loss on this. So FCX, I can probably just take most of the profit now. So I say this because like as I do this on 16 accounts, if I'm closing out some of these profits and getting rid of some of this naked put exposure, these ratio spreads, this is a lot of buying power I get back. So more importantly for me is if I do this, this beta weighted delta goes way down. I probably cut this in half, and my option buying power and my stock buying power probably goes up by, I'm not going to lie, probably by $400,000 to $500,000. Like that's a big deal. I could go from about 41% cash to maybe back to 50% cash, which I would feel a lot more comfortable doing that for kind of those outlier opportunities. Okay. All right, let's keep going. FXY, that is trading the yen. That's a currency hedge risk, I guess, or currency hedge. GLD. Well, we got some dollar cost averaging going. We got some ratio spreads. I'll get those organized right now. I'm just going to sit on that. GLW, that's Corning. This is a ratio with a naked put. Okay, right now it's down $40. If it shows positive, I would maybe throw it in there. This one's out. I mean, it's out to January. I think it's a good trade actually. It's probably a 92% chance profit. GNRC, this Generac, this one is up about 50%. Fine. It's probably gonna be a full winner, but again, less exposure is fine. Take the profit. Google, it's up $75. Probably a 97% chance profit, but I've got to sit on the trade for another 298 days. Do I want to do that? Not really. So could let it go. And the shitty part is I take much smaller profit. Like if these trades paid out, it's a lot more profit, obviously. But to me, the safe trade is have more cash. I can always go risk free with that cash I raise. If I put another $500,000 of cash in here, I can always go into BIL and get 4% on that. That's better than nothing, and it's risk free. So that's not a terrible way to do it. So it's like it's not like I'm just going to take small profits to get nothing for it. It's like I'll get something for unallocated cash. But anyway, I'm just trying to limit some of the volatility drag. Humana, this one, I'm gonna have to repair this one. I mean, we haven't been assigned or anything, but this one might be a repair a lot like it did like United Health Group last year. Bitcoin, I mean, I've got naked puts, covered calls. I just turned it so my Bitcoin allocation was I'm going to put about 5% of my portfolio into it. And once we started to sell off, I just started adding, 6 to 12 month premiums and lowered my cost basis by about 30%. Bitcoin had a, 50% drawdown. So I've reduced a lot of that drawdown, which is good. I still think there's a time and a place to maybe manage some Bitcoin, but right now it's performing like crap. Intel, I still have some shares. That's up a decent amount. I have a what's this? 121. That is a broke. Oh yeah, that was the trade I put on for pinch point last week, right here. So that's a broken wing butterfly structure. Okay, Russell has some ratio spreads. January 15th, that's a ratio spread. December 31st, that's a ratio spread. And a ratio spread. So right now, across the board on Russell, I'm up a couple of bucks, but I'll watch it. JD repairing. Man, that thing turned south, huh? Johnson & Johnson, probably take this one off the table. I'm up like 71% of the max profit. Goes to July. J&J, not bad. Okay, real quick for engineering options, I'm working on new trades. I'll get the levels out. It'd be a 3:30 expiration. We already have multiple 331 expiration trades. Okay, if you're in engineered options with me, we do have several 331 expiration trades. And if we did a standard weekly expiration, so if we went like to next week, 330 expiration, we already have a bunch of 331s. I don't need to stack 330 trades on top of 331s. I'd like to just kind of see where things are at first before we force trades for this week. Plus, with the gap up today, I'm not chasing the market as it's gapped up already 100, 1.5%. That throws off. I mean, participation. Do I want to participate at 1.5% up? Not really. I could put a break even trade in. I could put defense in. But we also have those expirations going into the end of the month already. So let's see where those key levels are at. Okay. All right. Let's keep going here. Kraft Heinz sold some puts. I might get a sign on that. That's a defensive play. Coca-Cola looks pretty good. It's covered. I'm just going to keep rolling this thing. That one's looking fine. I could get rid of that. Small profit, but wouldn't be bad. MasterCard, just put that one on last week. That's a ratio spread. It's already up a couple bucks. Again, like I said, I don't want to get rid of these trades. I want to trust that the market is, going to be efficient. I took these trades at super safe levels. Time is my friend. I mean, the more, I'm essentially getting about $1,700 a day in theta decay because I'm mostly an option seller. So, I mean, I'm getting $1,700 a day. The problem is with volatility all over the place and all the ups and downs of the market's given us, and the VIX at 20 to 30. The volatility in my portfolio is all over the place. My year to date high, by the way, has been like 200 grand. I was up $200,000 and then I'm down 50, and then I'm up 50, then I'm up 75, then I'm down 30. It's like, it's a lot of back and forth. It's literally within like a couple percent. I mean, like last week on Friday, if you're with me in that Friday session, this P&L year to date was like down at $107,000. It's like 1.2%, 1.3%. Like it's manageable. I mean, the market's down 7%. I'm down 1.2. However, I don't like being down. I play a lot of defense. I know that time is on my side, but I have my reservations. Like this market might not be what we think it is. This market might not be like ripping to all-time highs. This market might not be, testing 7,000 anytime soon. So if we're going to spend time going, remember 2022, lower and lower and lower and lower for 10 months. That was not fun. All right. So looking to play some defense. All right. Naked put combos here. Probably not in much trouble in this one. I am up about 51% of that, but I could take it off the table if I wanted to. That's 4 naked puts, by the way, so that would be some decent buying power back. Merck, up a decent amount of profit in this one as well. Expires in, I've got a naked put and a ratio spread. So 80, 75. Oh, yeah. So I basically have a ratio spread at 75 plus another naked put. I'll just take that's a good one to take profit, I think. MRK. MicroStrategy, that's it. Just have like 3 tiny shares of a shitty stock. If Bitcoin comes back, it'll be fine. Micron ratio spread should be fine, showing profit. Diagonal spread. I'm going to sell another cover call against that one. NCLH. So it's kind of like a poor man's covered call because I did as a diagonal spread because I bought a call and I was selling against it, kind of like the poor man's covered call. But it's showing 40 bucks. I can sell a call to get that paid for. This is out to January 2027. Netflix. I'll wait. It's upside down. Nike. I don't mind taking some ownership. I don't have to. The break-even price on Nike would be like low 40s. Nvidia. I have some shares. They're in profit. I've got it covered. I'll keep rolling those, by the way. I mean, my strike on NVIDIA, I'm rolling like a 135 call. And then this ratio spread is up a decent amount. I can play our codes at ratio spread. NVIDIA. NVO. That's Novo Nordisk. I'll sit on that one. Oracle ratio spread, small loss. Pfizer, up some decent profit. My diagonal, I'll try to sell against that diagonal. Pfizer. Okay, and then the naked put combo. Yeah. Progressive, down 30 bucks, but looks like a safe trade, 92% chance of profit. That's gold and silver. That is private equity. Qs, small profit. I'll let that sit. Schwab dividend, silver, still up a decent amount of profit. Lots of ratio spreads here. Let's see here. So I bought shares, sold the 115 covered call. Okay, fine. Let's see. Collar trade. Just trying to figure. This is the wide debit spread. Bought the 40, sold the 115. Yeah, that's a wide debit spread. Bull call. There. So I bought the 40, sold the 115. Yeah, that offers like 2.5 to 1 or 3 to 1. Anyway, it was a deep in the money call. Then this one is a naked put. Naked puts. All right, we're almost done here. SPY, lots of ratio spreads. Tesla, this one's going to be pretty profitable. I've got some $1,000 profit traps in here. Up to $7,000. Tesla's been a good stock for me. This one's up 22K. I mean, I'm not really exposed to Tesla unless it falls below 250 or 220. But like this 111, it's like that's a $1,000 profit trap with naked puts at 200, 190. I don't think they're going to get assigned. This is still a 99.5% chance of profit with a $1,000 profit trap. So like that trade's pretty good. Max is out around $1,300 and I'm up almost 1,100. That one's not bad. If I want to just get off the table now, that 1, 1, 1, 1. Uber. It's a ratio spread, down small. UNG, I hate natural gas. I want to sell against it, but I want to sell like a $15 to $20 call, not 12. Let's see here. USAR. That is the rare earth stuff. This is kind of a ratio, modified ratio. So ratio plus naked put. I'm down 24 bucks. No big deal. USO ratio spread. Probably not worried about this one. I mean, at a USO trade with a $50 strike, it's up to $111. Most likely going to be safe, but better safe than sorry. Take the small profit, get rid of the exposure. But having $360 winner to close out for like 60 bucks, like I'm not excited about that. But again, it's more important to reduce volatility, get the buying power back, have more dry powder at the ready, limit some of the volatility drag in my portfolio. Synthetic VIX. Who's in the trade with me for crash insurance, by the way? Who's with me in the VIX synthetic long? So we did a sell put at 17, buy call at 17, and a buy put to cap the downside. It's looking good as far as we've got profit. This is out to April 15th, which is only 22 days out. We have not seen, right? We haven't really seen the spike to 40, 45, 50 VIX. And I don't know if we're going to see it. At this point, if we were going to see like a 40 VIX, I feel like it would have happened last week. With that felt like a bit of a crescendo going into Friday with the markets, being under pressure. We had the announcement on Friday afternoon that U.S. troops are going in the ground, and then it completely pivots today. So I hate to say it, but it's like if we've got some profit in here, one of two choices. One is you take the profit and you get rid of this trade altogether, and then your VIX long is done. The other is you let it ride. Because if we have a VIX event and the thing spikes to 40, 50, this trade's going to pay like $3,000, $4,000. So is it a trade-off? It's a sacrifice. I mean, this is the trade where it's like, my risk is like 350 bucks max. If this 350 bucks can pay thousands of dollars with a VIX event, I'd obviously rather keep the trade open. And if I sacrifice that $300 to, make profit elsewhere in my portfolio, that's okay. I don't mind having the VIX synthetic long. I'm just a little disappointed that we haven't seen, even with the run to when the VIX was up to like 35, this was up about $500 to $600. So even that was not as profitable as I thought it would be. I thought we'd get up into the, $1,000 profit, a couple $1,000 profit, but it was not. But VIX got really expensive over the last, month or so. VT, what is this? Vanguard. Oh yeah, this is total world. This only has about 40% US exposure. I have a ratio spread and a naked put. So ratio plus naked put. This one's not a bad exposure. I'm down 50 bucks. Walmart. This is a pinch point trade, not news. Sorry, this is pinch point, or not pinch point. Project Options Edge. So Project Options Edge, 85 by 80 ratio spread. It's down 20 bucks. XLE could probably start taking profit here. I have the shares. I have naked puts. I've got ratio spreads. Lots of naked puts actually. So all naked puts. These are two more naked puts right here. 40 and 35. We're trading up to 60 bucks. So own the shares. That's up $700. Naked puts, 270. That total profit would be 540 bucks. I mean, that's a good one. Close out the naked puts out to June. So that's XLE. And this one's out a little bit further, but still up about 50%. Yeah, I think that's a good one. I think the energy play it's good to take some profit. XLG. Yeah. I don't know. It's okay. I'll just get rid of some of these trades, I guess. Profit. Small profit. These are actually pretty good profits, though. The energy plays that have, I'm up 75, 80% of my max credit. That's not bad. XLU. That one maxes out about 90 bucks. This one maxes out about 160. Okay. These are out the I might keep these a little bit longer. These are out to June. I can stomach that timeline. I'm just trying to get rid of the trades that are out to like September, December, January. Those are the trades that if I have profit, I'll get rid of some of those. XOM, again, all profit. That's fine. So XLG, XLU. I'll just assess these. XOM, which is ExxonMobil XOP. Okay, so there's a little walkthrough. So I got some work to do this week. That's a lot of tickers and a lot of trades that I wouldn't mind trimming some of that exposure. Okay. So here's our day, right? There, this is gamma. Everything is above it. There's really, little to no action up here. Let me go to the real-time GEX for Tanuki trade. Let's look at 0DT for this morning. I mean, there's not much past the 6650, so we should be hitting some resistance around now. Like 665 XSP or 6650 should be some decent resistance. Could the market rip all day? Sure. But should it? No. I think that we have like the surge up, the gap up, the little relief, and the market just kind of trickles, but maybe like limited pushing for the remainder of the day. So it's already had some decent trajectory. We're positive on the day. The market can be happy about that. Is it going to be like a slow grind to the upside? Sure, but I just hope that it stays less than 6680, 6685. 6685 is my sell call on my daily profit play. But if it does get to 6685, that would be a $1,000 profit trap on my daily profit play defense that I played. So I mean, I've got something there to defend it, hopefully. All right, let me go back to SPX here. So we're at 6638. Again, gamma, not super large past like 6650. Price can break it, sure, but does it break it with all sorts of momentum? I mean, it's an outlier day if we do it, but our measured move, that's why I put in the expected box. 6686. Like we shouldn't see prices getting above that today. So hopefully, all this being said today, all this chat is we stay below this line, we stay above this line, and I'm going to make $2.45 profit on the day. That's fine. And if we come back into here and we neutralize, we still make $2.45, and the market essentially went nowhere. Despite the big exciting gap to the upside, the market intraday realized volatility, actual volatility, didn't go anywhere. So we'll see what happens. Okay, thoughts for the day. Yeah, it shouldn't. And I can confidently say it shouldn't. I mean, when I put the trade on, it was a 10 delta. It shouldn't go higher than that. My defense trade is a 7 delta. It shouldn't go higher than that. Right? That's probability. Doesn't mean that it can't. It means that it shouldn't. I take those chances every day. All right. What else we got going on here? 331. Yeah, so that would have been posted. So the 331 trades we took in that masterclass, Johnny. Let me see. So engineered options. So the weeklies, again, like mostly in profit here. These are the two defense trades, mostly in profit. I mean, again, looking pretty good. This one was break even or better. I'm trying to get this one for break even or better. If I take the small loss, it is what it is. I lose 50 bucks, make 400 bucks elsewhere. Monthly trades. So this is 667, 666 out to the end of the month. This is a 682, 681 out to the end of the month. Again, they're contract sizes. This is a one contract, two contract combo. The monthly trades, they're not an XSP. I have these two bull put spreads on XSP, but the SPX were the monthly trades we took during the, if you did the master class with me, that little bonus strategy class, it would have been maybe 2-3 weeks ago now, probably 3 weeks ago. This is what we got into for some of these monthly trades. Okay. So I have, as long as we can stay above 65.20 or above 65.85 or even above 66.65. I don't know. So we have defense, 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 defense pending. They all have profit traps as well. So in the next 8 days, this could be very interesting where we have some trades that worth, I mean, right now, this total trade. So $2, 250, 250, 250. There is about $950 worth of credit. And there's also one, two, three, $4,000 in profit trap opportunities. And my risk is essentially a 1-to-1. So the most I can risk is I'd be risking $1,000 maximum for all 4 trades. Okay. But I can make on the upside, I can make 950, which is almost a 1-to-1 because one of the trades I took $2 instead of 250. And then the $4,000 profit trap, even if I just land one of them, if I land one profit trap, I pay for all of my risk in all 4 trades. That's not bad. Okay. So, I had a lot of questions of like, why did it take so long to get these trades filled? Why was price why was price so much lower than our strikes? Because that's what has to happen. If you want a broken wing butterfly to give you 1-to-1 reward to risk, price has to be below your strikes. Because I'm doing a debit spread plus a credit spread, and I need the credit spread to give me so much credit to finance the trade to give me a 1-to-1 setup that it has to be, so far in the money. So, because remember, a credit spread, you want it to finish out of the money to get paid. So it has to be so far in the money in order to get the credit to finance the trade at a 1-to-1. So, I mean, in a way, it's like I'm thankful that price did push down through our strikes because we got them filled. So, because I have this stacked up here, I don't feel like I need to force a trade putting in participation, break even, defense for a Monday expiration when I already have 6 trades running for next Tuesday. I'm just going to let those manage. Okay. So, what I will do for engineered options is I will post a video. I'll post a video. Let me get through my next class. I've got a class at 11:30 with waterfall income. I'll post a video shortly after that for engineered options and say, look, this is where we're at. We do have some monthly trades sitting, monthly trades pending. These are my key levels. I'll be watching this. We have profit trust built in, blah, blah, blah. This is why I'm not going to force trades for this week's, engineered options to have a 3:30 expiration when I have basically I have 6 trades running for a 3:31. That's plenty of action for this week, right? Plus with a gap up today, I mean, it's just like another wild and crazy week. I mean, again, this is just funny. Like I deal with this stuff all the time. But when last week opened, by the way, let me go back to let me find, where is my daily profit play here? So when last week opened, Monday, I had a lot of people email me and say, Chris, why aren't we taking the participation trade? And I even told our customer support team, I'm like, I do not think for a second that this market is going to go up and stay up all week. And so we did a participation trade right there, a break even trade right there, and then our defense trades. And what happened? We got filled, we got filled, we got filled, we got filled. And now what's happening? We're getting the profit. So I don't like to chase. This is not an environment where the market is easily going up. This is a market that the pop to the upside is getting faded. And even today's move, like this isn't done. If this market is going to go low, high, consolidate, and have another push higher, great. Relief rally it is. But to what extent? Maybe 6,800, and then we'll see if the market turns back. I mean, how many believe that right now, like this is the bottom? This is the bottom. We're going to 7,000 plus. Who believes that right now? In your heart of hearts, Trump says we're talking to Iran. Market loves us so much, we're going to all-time highs. Who believes that? Not me. Don says sell the rallies. Jeff says nope. Who believes it? I don't believe it. Does that mean I'm a bear? No, it just means that I need to limit the risk. I don't think 7,000 is going to be hit. And if it is hit, I think it's something you sell. So I think if we're lucky, I mean, just go back to this chart here. If we are lucky, this offers the 200-day bounce, right? 200 moving average bounce We get up into this level where this was broken structure. Okay. This is a perfect resistance point for the market to say, okay, thank you for coming back to us. Now the bears can resume. Right. I mean, what's kind of interesting is there a trade that we can consider? And again, I don't want to call the top here, but there's a trade that might be interesting where we put in maybe like a profit trap right in here. And it has no downside risk and it has a little bit of managed risk to the upside, but our risk would be maybe around like the 7,000 handle. So if price was going to break our trade, you'd have small risk greater than 7,000, but you'd essentially have a profit trap around like 68, maybe 6,800 to 6,850, and you have no risk to the downside. I don't think that's a bad trade at all, right? But when would I take that trade? Not now. I take the trade if price is up here. I'd take that trade because our credits are going to get better and we're not trading this thing out of the money. So I'll look at that trade. Like when the moment comes, if we're up to like 6750, 6800, I will look at a trade that has kind of this profit trap between 68, 6850. And my max risk is maybe up to 7,000. See what type of profit trap I can build out to make this risk manageable and then have no downside risk. Because if we do roll back over, I want to get paid. Right. So let's see what that looks like. Let's see here. Yeah. So I don't think that's a bad trade. And if I look at it right now, I don't know. Let's talk about it. Let's say April, May, June ish, maybe out to May. So let's go SPX. Let's go end of May expiration. And I don't know, maybe May, June, whatever. But I'll just take a look at it price wise right now. So I kind of like the profit trap around like 68 to 68.50. So if I were to start maybe the 68.25, 68.50, that'd be the pin price. And then let's see, I might have to go a little bit wider. So that's 50 wide, puts my break even at 69. Maybe this. So buy the 68.50, sell the 69, and then that's 50 wide. So let's see what this strike looks like. So if I went 50 wide and I go 60 wide. Okay. So right here, I mean, this is kind of crazy. I could take the trade right now, and it's really not terrible risk. I mean, it's not fantastic reward to risk, but I could get a pretty safe $100. Okay, let's say, and again, you see how the mid is like 95 cents to a dollar. I could get a pretty safe $100. I'd be risking $900, but I have a $5,000 profit trap. If price is anywhere between 68.50 to 69.50, we have a profit trap. So anything greater than 69.50 would be my risk, and it's capped at a $900 risk. That's not a bad trade. Okay. Now I could do this to say, okay, I'm going to cap it around 7,000, right? Let's just say that 7,000 is my risk. Like I'm dead wrong if we're at 7,000. So let's build that trade out. So I would do something like this: 69.50. I go 60 wide here, and then 6,900. So this one, I mean, I think I would take this trade for $1 or better. I'd risk $900 to make $1, but I'd build out a $50 profit trap or a $5,000 profit trap. I don't think that's a bad trade. So if price goes higher, it's this type of setup that I want to look at. I buy the 69, I sell the 69.50 with two contracts. I buy the 70.10. My break-even price would be 7,000. Okay. So if this trade offers, let's say we get this trade to offer up, I'm going to go after, let's see, $1 wouldn't be terrible. $2 would be fine. Let's go 250. I'm going to take this trade. It's going to be pending order, kind of a bonus trade. If I get it for 250 credit, okay, 250 credit. So I'm going out to the May 29th expiration. My break-even price is just over 7,000. So if I can get the trade filled for 250, I'm risking 750 to make 250, but I have a $5,000 profit trap built in. So price is anywhere between 6,900 all the way up to 69.99. I have bonus profit in my pocket. And there's no risk to the downside. So if it does fill at $2 or $2.50, I'm most likely going to keep that profit. I have no risk to the downside. But that way, if we have like a little bit of a squeeze to the upside, but we kind of fade off that 7,000 handle, this could be a fantastic trade. But we got to be comfortable with some risk on the trade. I can't make it risk free. I can make the downside risk free, but I've got to have something where I'm essentially calling the top. Okay. So what I'll do is I'll put this trade in pending order. And if price comes back to this level around 6,750 to 6,800, I want to see what that trade is offering. I might lower my credit a little bit because I still like the trade. It's just a matter of, could I get, instead of getting 250 credit, maybe I have to get $1.50 to $1.75. Okay, fine. Then it's just me. It's up to me if I want to justify taking on that extra risk. Does that make sense? All right. So pending order if you want it, 6,900, 6,950, 7010. I'm looking for 250. I will assess this trade as price does its thing, right? If price gets up to 6,800, I'll look at this trade. Maybe it's offering over $1. Maybe it's not offering 250 yet, but I'll watch. Okay. So I'm going to put this in. This will be everyone for my bonus trades here. Let's go bonus trades. There. So SPX, I'm doing the 529 expiration, 6,900 call, 6,950 call, buy the 7010 call, 250 credit, pending, good till canceled. So this is a broken wing butterfly. Profit trap from 6,900 to 6,999.99. I mean, I guess we can just say 7,000. Break-even price, if filled, would be 7,002.50 if filled. This is a, reward to risk setup that has no downside risk if SPX falls lower and calls resistance around the 6,800 to even 7,000 highs, but the market struggles to reclaim all-time highs. Okay, let me throw that in option strat and kind of build it out. By the way, I think I'm going to add, so I saw the option strat is like $400 a year if you want to buy it and do like the real-time modeling. I can add it for, I think, $300 for my option omega. I think I'm just going to add the option omega and have that real-time modeling. That way I'll reference that when I want to build out trades, and that way I can have like exactly what I put in. I can have the exact like P&L, all the theta, vega, all that stuff I want to play around with the options. So this is the very quick and dirty way to get that trade set up. So I'm doing a broken wing. I'll just put in a call fly. SPX May 29th. Here, I'd be buying the 6,900. So buy the 69, sell the 6,950, and then buy the 7010. There's the trade. Okay. So what I'm looking for on this trade is if this will offer a bit more upfront credit. If I can get this trade for, let's say, $200, I want it to be there, right? So getting a little bit more upfront credit. So the upfront credit of $2.50. Okay. And I would settle, I mean, full transparency, I would settle for like $1.50. $1.50, $1.75. I'll still take that trade. and mainly because of that 50 wide profit trap. So this perfect pin price would be 69.50, and that's worth up to 5 grand. So if I get the trade filled for, $1.50 or $2.50, my break even price over here is going to be 7,002.50. And so beyond that price, if we're beyond the 70.10, greater than 70.10 is max risk. And that would be $7.50. So this fills, I risk 750 to make 250, but there's no downside risk. And I build out up to $5,000 profit trap by expiration, which could make things pretty cool. At the end of May, if we're trading around 6,900, 6,910, 6,920, 6,950, bring it on. That's profit trap material. Okay. All right. Any questions on the trade? Any questions on today? So far, looking at the expected move box, we're still within our levels. We'll see where the day finishes. Just going to take a quick peek at futures. I mean, we had this crazy spike in the morning and it still hasn't reclaimed it. So I'm setting a chart alarm up here. I will see what the day ends up doing in futures as well. If we give some of it back and we eat into this big impulsive news break candle, whatever, then we still have like an efficient day in futures as well. But that is not yet seen. So I've got a chart alarm set to see if we break fresh highs. Watching, of course, my expected move box right here. As long as we stay below 66.86, we should be in good shape. I do have profit traps up here. So remember the defense trade I took is a 75 by 90. So if price is threatening this level, I still have up to $1,500 to help protect me. And I'm only 10 wide. Well, I mean, I'm 10 wide on two spreads. So it'll be close, but we'll figure it out. Where would price have to go to get 250 credit? That's a good question, Randy. So price probably would have to rally up. It'd probably have to rally to like 6,800 or so. I would imagine probably the 6,750 to 6,800 level. I think if we get up here towards like 6,750, 6,800, let's look at it. Let's set the chart alarm here around like 6,750, and let's assess that butterfly spread. Okay, because if price is 6,750 or 6,800 and it's only offering a dollar or $1.20, it's like I might have to make that decision to accept that trade because maybe I won't get the 250. Okay. Sarah, can you post a one trade mastery link again? Yes, I will. Are your iron counter strategies in your instructional videos? They are for daily profit play, Ryan. Yep. So if you are in daily profit play, it's one of our core strategies. We do it every single day. One trade mastery for Sarah coming up. Post it in Zoom. One trade mastery. So Ryan, if you're in my daily profit play classroom, there is a video called Core Strategy, and it's maybe 15 minutes, but that is exactly what you'd want to see for this is how we trade our daily profit play every single day. This is what I do. This is my mechanical trade. So you can, get up to speed on that in about 15, 20 minutes. Okay, one trade mastery is posted. Mark, can you explain your expected move box trades? Yep. I mean, all I'm really doing is I'm pulling from the broker platform. So this is something I built so I can customize all of my plus minuses every single day. And it's not just a zero DTE. I mean, I did this trade when I first built this thing. I was shown at a couple of YouTube sessions, and the VIX was up to like 27. So I went out and I did like a very classic like 45-day iron condor. Kind of tasty trade 101. They like to do strangles. I like to do define risk. So I did iron condor. Anyway, I went out 45 days in my broker platform. I found the plus minus, and at that time I did the trade in XSP and SPX, and I think we did like a 6,100 SPX to like a 7,000 or something. It was like super wide. Let me see if I can find the trade here. So I know it was a April expiration. So this is the XSP equivalent. So I need price on XSP to stay below. If it stays below 70.20, We're looking pretty good on the call side. If it stays above 640 or 615, it's looking pretty good on the put side. The equivalent of that for SPX, I pulled in like $7 credit. Let me find that trade here. So it should be the April 30th. Nope, that's a waterfall trade. There it is. So this expect to move bonus trade, I took my expect to move box. I went out exactly 45 days. It was like 45, 46 days. And I need price to stay above 61.75 or below 71.75 in order to make 700 bucks. So what I use this expect to move box for is I pull the information from my broker platform. Okay. If I want to go out 0 DT like today, I use this 0 day plus or minus right here. So this morning when we came into the session, it was a plus or minus 84.31. So plus minus 84.31. And so I take that number. And I plug it into my expected box. I only show the box 2. The way I built the indicator is previous close as a reference for box 1. Box 2 is gap adjusted, which to me is the safer way to trade. Safer way. Now, it doesn't mean that you're going to get the best premium because obviously a gap adjusted is going to move your gaps higher and gaps lower. So it's going to be further out of the money, but it's the safer way to take that expected move into consideration. Okay. Especially if I want to hold the trade longer for the day or hold it towards expiration of that day, then I tend to go to box 2, and that's my reference point. Box 1, this is why I would say look at box 1. Because of the gap today, okay, if you had a box 1, which is referencing the close from Friday, you're already outside of the expected move. So even though you can get a big fat premium for this trade, you're off because the market gapped up already and exceeded it. So that's why I go into gap 2, or I'm sorry, box 2. That way it shows that it's gap adjusted. So I punch in my plus minus inside the indicator right there. If I have the box 2 reference, that's going to take the gap adjusted. So if we gap higher, I take this gap plus the expected move, and I take the previous day's close and the expected move. So it gives me a much wider area to trade. Price should not, on a day-to-day basis, as far as efficiency goes, price should not exceed this box high, box low if it's gap adjusted. Does that make sense? So whether it's 0 day or 1 day or 5 day or 30 day or 60 day or whatever you want to trade, based on what the options market is telling you, trade the efficiencies. Indexes, especially, I trade the efficiencies, right? I mean, individual stocks, I mean, what's the expected boom box going to be great for? Trading indexes, like trading index futures, trading indexes, trading oil. I mean, oil volatility has been insane. So if you did iron condors on oil to take advantage of that volatility pump, make a lot of money because now it's quieted down a little bit. Yes, oil is moving, right? Oil's moving a lot, but guess what? There was you could do like 100, and I mean you could go out like 45 days. This is not an exaggeration. You can go from when this move started up here, when we got to like 100 and some dollars in oil. I'm trying to think when it was. It would have been after this crazy move here. So we went up, down, and then right back up. When we came to this zone, you could go to like $140 call and a $65 put. Guess what? Time and this expected move is a good thing. So, I mean, it would have been blown out if you were in early because that's obviously a huge move. And it's not, I'm just saying this is easy. But when this market had a crazy thrust up and down and volatility was so high and there's all this uncertainty, everyone's saying like oil's going to 150. Okay. But it didn't. And so volatility premium, you can take advantage of it. I mean, a 45-day option, you pulled in, some really good credit on oil futures, and you were way the heck up here to 145 and all the way down here to like 60, 65. Probability profit is probably like 85 to 90%, and you're getting a decent premium. And it's not one I want to hold on forever. But if for the next 20 days it's looking good, where it's nowhere close to those expected moves getting threatened, then you're in good shape. Okay. Right. So we will keep an eye out for The remainder of the day, yes, new intraday high. Okay, fine. So question is it, intraday high that goes and goes and goes and goes and goes and stays up all day? Or is it intraday high that goes and then finishes, slightly below the expected move? I'm still going to take the probability that we don't close above 66.86 today. That's my trade. Okay, so we'll see how it plays out. All right. This morning open Thinkorswim is 65. Yeah, I've said that before, Randy. I'll take the higher of the two. So if you cross-reference Thinkorswim or Tasty, this is why we do it every morning. I just take the higher of the two. Tasty was 84.31. And I don't know, why it's higher. It doesn't matter to me. What matters is if I'm trying to call a top or bottom, I'm trying to call it safe. So I'll take the higher of the two. There you go, Jeff. Yeah, man. Good showing in the old Big Ten. Michigan State, Michigan, Iowa, and who else? Purdue. Did UCLA make it? Illinois? UCLA got beat? Okay. I saw the upset last night too with Kansas. I mean, you can't be down the whole game, dude. Kansas was, trailing by like 14, 16 points or something like that the entire game to St. John's. They came back. They took the lead, lost to a buzzer beater at the end. But silly. Yeah. I always like seeing the Big Ten get a little bit of respect in the tournament. Okay, that'll be a good game. Spartans and UConn, that'll be a good game. Yep, Kentucky lost yesterday. They got beat bad by Iowa State. Okay, so we got Big Ten presence there: Nebraska, Iowa, Michigan, Illinois, Michigan State, Purdue. That's pretty good. Even though there's like 20 schools in the Big Ten now. So, all right, let's wrap it up here for daily profit play. Mark, you good on the explanation for expected move box? If anybody is interested in this expected move box, you can have it. It's $20. Send me an email, chrispulverpub@gmail.com. I have a 18-minute video that explains how I use it, why I use it, how to put it on your charts. It's good for TradingView and Thinkorswim. So if you're interested, just send me an email, chrispulverpub@gmail.com, and I'll send you the expected move information. I think we'll wrap it up there. Deanna, do we have anything else? I don't think we have a stream. I did a live session yesterday, so I think we're good. I will probably come back on this afternoon for a little late session, see what the day closes up looks like. We obviously have skin in the game for engineered options. I'll be live at 11:30 a.m. for waterfall income. And let's see if we can get a nice, safe daily profit play today. We'll see if price keeps breaking higher. Maybe it does, maybe it doesn't. We'll keep an eye on it. Okay, waterfall income traders, I'll see you in 24 minutes. Daily profit play, keep an eye on this for the day. Engineered options looking like we should walk away with a net winner from last week, despite literally having the crappiest, what looked to be a crappy week. It's like, I'm telling you, 7DT is a very magical thing when the market comes over the weekend and just figures out that it's a little oversold. We need price to stay above 6. So greater than 659. Okay. Greater than 659 and greater than 652. Winner, winner. That defense alone helps me make money for the entire week. If we stay above 663, I already took the profit in this one for a small win. I made $8 on it. It was better than losing. I reduced $100 of risk. So if I can win, that's $408. And if it doesn't get all the way to 667, if it doesn't get to 667, then I will end up taking about a $358 winner for the week, which is not bad. chrispulverpub@gmail.com. Okay, so we'll keep an eye on that. Probability of profit on XSP. Let's have a look real quick, just for today's trades. So my engineered options. Go to XSP. We have the weekly. So 667. If it's above that, I mean, like I said, I'm trying to close this thing for break even. It shows it's only down like 15, $20 right now. I mean, part of me should just take a small loss here and just, I mean, we could maybe go an extra $2 to make this a winner. I guess I'll let it, I don't know. I'm thinking if I let it ride, if we get above 667, that's a bonus $50 for the week. Could it happen? Sure. What's that probability of profit right now? So getting above 667, we have to move another. I mean, it's there. Like you can see, the expected move is still gettable. If we're going to keep going higher for the day, we can get above it. So, like I said, as long as I get break even or better, then that would be break even or better here, break even or better here, and then defense winner, and then another defense winner that's a little bit lower. That'd be my $400 on the week. So that'd be, why is that trade not? Oh, it's okay. I already closed it. It doesn't show here. The 663 by 662. So I have a sell buy. That one closed for a break even. So if I go break even here, winner here, that could be looking pretty good. If it falls back down, then I take a loss here. I already closed this one for break even. I still think that the defense trades are looking pretty good for profit. $20, Pete. If you're looking for the expected move box, yeah, $20. Think or swim or trading view. All right, so we're looking good for engineered options. We'll be live in about 20 minutes for waterfall income. Daily profit play, just going to keep an eye on my trades for the day. Hopefully we are, because of the gap higher, hopefully the gap higher plus that bigger expected move, price will not close above 66.86 today. That would be lovely. Make a few $100. Cool. All right. I'll let you go. See you in class in a little bit. Waterfall income. Look for a video on engineered options. I'll post a little video update for the trades for this week and what we have riding for the end of the month on 3/31, which is next Tuesday. And also, if the market gives us that little gift of pushing up to like 6,750, 6,800, this week, this is a good time. A couple things. This is a good time to deleverage, in my opinion. Right. One of the more challenging times in the market will be if we come right back up to the 200-day moving average. The market has to make a decision. Is this enough to say that everything is great, we're going right back to highs, or is this volatility persists? I don't know. But given what this market has done so far, it's hard for me to believe that this market is fixed and that we're just going to go up, 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 up to all-time highs. So that's why I'm like, yeah, let's see what that little broke wing butterfly trade looks like, where I can build a profit trap, have no downside risk, and maybe have like that $5,000 profit trap up here. That'd be a pretty good trade. So I'll assess that this week. If we come back to like 6,750, 6,800, let's see what that one offers. There's going to be risk. It's going to be risk on the trade, but I think that a $5,000 profit trap seems pretty enticing to me. Chuck, I'm not getting my expected move box. Chuck, let me see. I think I already have you in here, man. I gave you Thinkorswim access. I know I emailed you. If you sent me, let me check my email here. Baseball, is that you? Yeah, Chuck, I never got a reply back from you. I need a reply from you to tell me what your TradingView user ID is. I sent you an email 10 days ago on March 13th. And I just replied to the emails you sent me. So your, baseball email, I sent that on Friday, March 13th. So all I need is your user ID. If you give me the user ID, then I'll give you the TradingView access. So that's all that's missing. Yeah. So send me an email with your user ID and TradingView, and I'll get you hooked up. It takes me, 5 seconds to give you the access. I just need your user ID. Okay. Good stuff. All right, I'll let you go. See you in a few minutes for waterfall income. See you later today. Let's keep an eye on our expected move box for the day. SPX below 66.85 would be fantastic. If we come back and settle back into neutral, that's fine. Market clearly is loving this news today. And, we got another 2% rally. That's, impressive stuff. Nice recovery. I think this is just a short squeeze. Chris Pulver Pub at Gmail. Chuck, you and I've had like 16 emails. I think you can find me if you look in your email. We've had like 16 emails back and forth. So there's got to be a thread in there you can find if you look me up. Just search my name or Chris Pulver Pub at Gmail. Okay. All right, buddy. I'll see you in a little bit. Waterfall income. Look for video update engine options. Hopefully, you have a full win on defense today. I'll come back this afternoon for a little closing bell sesh, and we'll talk soon. All right. Bye. Sarah, send me an email. I don't really have a recommended broker. I use, Tasty Trade and Thinkorswim, which is Schwab. But I mean, I don't really recommend. I just want to make sure that you have the best permissions to trade. So I can, as far as trading execution, I get great permissions with both of them. Tasty, I kind of give the more trader's edge. But anyway, send me an email. Ask. I'll give you my 2 cents. All right, we'll talk soon. Thanks. Bye.